morning, everyone. Thank you for joining us again for another one of our webinars. And today on our tech stack journey, we are looking at flow. And on the call, we have Patrick and we have Colin as well. And so we really think these webinars are important for our clients, just to get a really in-depth demonstration of the product. And again, seeing what other products we use. We always talk about Xero, we talk about Receipt to Bank as our entry-level stack. But, you know, we want to deep dive with yourselves and show all the other tools that we use. So I'm just going to hand over to Patrick, who will give us a little bit more insight as to how we use Flow here at Farnell Clarke.
Hey, hi everybody. My name's Patrick. I'm a chartered accountant here at Farnell Clarke, and I work with people to improve their business performance, and that's from very small businesses just starting out, or even pre-sales. I work with a lot of startups who are looking for funding. So I do a lot of forecasting with companies, and to do that, to get real granular level look at cash, we use float. So that's how we use it with all size companies, and it gives great visibility on cash flow. So I'll hand over to Colin Hewitt, who's the founder of Float, and he's going to take you through how the product works.
Great. Hey, Patrick. Thanks,
hey.
Rebecca. So yeah, guys, it's great to be able to give you a run through with Float. I need to share my screen. Let me jump in and do that just now so you can see Float. So hopefully you're seeing my screen. And this is just really, I'm going to run through very quickly how we use Float. And I'm going to show you a few things that you can do that a lot of people kind of miss sometimes if they come to it by themselves. So this really the whole reason for me, just to give you a bit of background, the whole reason why we started Float was because when I was running my previous business, which was a digital agency, there was those moments where you're lying awake at night thinking, gosh, have we got enough cash to make the payroll at the end of the month or the end of next month? What happens, if this client doesn't pay us, or what happens if, how much is our VAT going to be, and do we have enough in the bank to make that payment? So these things, there's lots of variables as the company starts to grow. When you've got a payroll maybe of 4 or 5 people, and you're starting to have that sort of as significant outgoings in terms of payroll or VAT or something along those lines, and even end of year taxes. There's different points in the year when taxes coming in and out in different ways. And certainly for some businesses, it's much more lumpy than others. And really, I was doing this all in a spreadsheet. And if you're doing this in a spreadsheet, after a while, there's just so many inputs and outputs that it becomes really difficult to track. So we wanted to build a kind of real-time financial dashboard, which would just show us everything that was possible, and just give us that peace of mind that there was going to be enough cash in the bank. And the other thing is, if you're doing this in a spreadsheet, it's constantly going out of date. Whereas the nice thing about Float, when it's connecting to the likes of Xero and QuickBooks, you're getting that constant update of things. Float updates every night automatically. But you can also sync it using this little button over here on the right. At any point, if you've done something, or if something's come in that's new data, you can just sync it, and straight away it'll come into Float. So what are we looking at here? This is the overview page. It shows us, apologies, this demo account's in dollars, but it shows us here that our total bank balance, this is a Xero company, is just over £1,000. The bank accounts, there's two bank accounts that's referencing, and I'll come back to that. And you can see these. If I click on that, I can see these two here. I've got a savings account and a business bank account. There's nothing in the savings account, so it's all just really essentially under one account. And I can see there's 27 unreconciled items, which we'll come back to. The other thing it tells me here on this overview is there's 8 bills that are past the expected date, which I need to pay. There's also 5 invoices that need to be chased. to the tune of 6 or 7 grand. And then again here, there's 27 unreconciled items that I need to fix in my zero account. We're coming up to halfway through the month, and that's important because it really depends on having, you know, when we're looking at budgets, some things may be over budget, some things may be under budget, but you know, the closer we get to the end of the month, the more realistic we can try and make those projections. And then finally here on the right, we've got our projection for cash in is 27K, and we've only brought in 10K so far. And our total cash out is 19, and we've spent just over 7. So that's quite useful to pick up any anomalies. If you're way over or way under, then you know there's something you might want to be addressed. And then this graph at the bottom is just showing like typically what's our kind of cash burn in and out. The data in this company is not maybe as good as it could be, but say we were over 2K over in our cash in June. In July we were slightly pretty much bang on, and in August we've got a net cash movement of plus 2K. So overall, that's just giving us a sense of how this company is tracking cash. And then really the core thing that we try and do with Float is to give you a graph, and this blue line is showing your projected bank balance. So you can really see the lowest point in this graph is we're getting down to 4,000. So if we don't have an overdraft for that, then that's something that we want to address. And the highest point up here over the next couple of months is 23K. So that's not bad either. But obviously the big thing is we want you to be able to trust this. This is exactly what's going to happen. The first step in that is in setting budgets and making, when we say budgets and Float, we think about them like placeholders. So your rent, for example, is you might not think of it as a budget, but it's something that's going to come out every month or every quarter, and how, you know, it's really important to get that in to the forecast in the shape of a budget. So I'll show you how you would do something like that. So clicking on that graph takes me into the main cash flow tab here. And here we get a little bit more information. We've got the total reconciled balance in zero, the amount that needs to be reconciled. So there's about 5,000 that we don't know where to put it essentially, and needs to be sorted. And then there's the date when cash flow is below 10K, which is maybe what we've set this company's overdraft to be. So the good sign is that that's never. But if I was to change that to be below 0 in the case that they didn't have there was no overdraft on the business, now we'd say your cash is already under 0, so we're already sitting at a minus 2,000, so that's not good. If I change that again to say something like 5,000, for example, so again, we're good. The cash is never going below that amount. So in the next 3 years, so that this company is just about making it work, as you can see on this graph. So the graph is great for me. I'm a visual person. I like to see graphs rather than looking at tables and numbers. But obviously, where these numbers come from, this is almost like a spreadsheet, the typical kind of cash flow spreadsheet where you put in amounts and you put in dates. Now, Float gives you a lot more control than just that in terms of monthly budgets and single budgets coming out on certain dates. So if I wanted to go into, we were talking about that rent. Now, here's a good example where actually we decide that we're going to need to increase our rent's going to be going up in December for whatever reason. The landlord's decided that we've been on a low rent for too long. So in this, I'd click on that rent. I can see that we've set a budget for just over 1,700 on the first of the month every month. Now we might decide to take on another. Let's increase this one. So we're going to increase this to. It's going to go up to 2,500 every month. So I'm changing it from not just this month to all future months. Budget occurs every month. Comes out on the first, as we said, and I'm going to save those changes. So as we do that,
25 grand. That's a lot of rent.
Oh, it's 25 grand. Sorry, yeah. That's going to drastically. That's going to kill our budget. Let me change that, because that is a lot for rent. Just going to exit out of that because I think it has. My internet has gone flaky.
Yeah, how's
so
the Wi-Fi there?
Yeah, we lost the Wi-Fi. So that, but we can see that that has happened, and just to show you the dramatic effect of that, our cash has dropped significantly on in that day. So let me just go back in and change that to 2,500. So I'm going to click on that again. I'm going to go in. I'm going to change it to 2,500. I'm going to save the changes. So while that's working away, it's calculating how that's going to work. And I've just done it for this month only, so I need to change it to this on all future months. Let's do it one more time. Third time lucky. This in all future months, $2,500. Save changes. So that's the budget. Now let's see. We want to see from there what the impact is on the graph. Again, being a visual person, it's just making those little changes. I'll go in and I'll close that, and I can see that now we're going to start to hit problems in on the 1st of May 2020. That's when our cash is going to fall below 5,000. So something as simple as rent increasing in this business is actually, in danger of putting us in a more vulnerable cash position. In terms of the other thing that that we've added recently is the ability to go into, another thing we could do here, just using the rent example, is if I actually click on that rent and go in and say, well, what if we were to open another office? Let's say we've got a new office. Let's have a new Norwich office because obviously Norwich is the center of the universe, and we want to set up base there, and that's going to be let's say maybe office space is a bit cheaper, 2,000 a month. It's going to occur every month. And this time it's going to come out on the 14th of the month. I'm going to create a budget.
Right, okay, let's have that conversation about Wi-Fi in Edinburgh.
Is my voice cutting out?
No, your voice is fine, but updating the old...
Yeah, well, it's gone in. So there's the new Norwich office, and let's now have a look at what that's doing. So basically, that's now taking us down to significant challenges, but obviously we think that's gonna bulk up our sales. But now I don't want to start messing around too much with this scenario. So the great thing about Flow is we can create a scenario to layer on top of this. So if I go into, we've actually created a couple where we've got a new sales hire, because obviously we're gonna have to put people in the office. So let's jump into this scenario. And all of a sudden I can see what my colleague has done here on the forecast, and I want to go in and see what's different. So sales are highlighted orange, which you can see here. So I can know that there's a change in this scenario. Everything else is going to be exactly the same as the base, unless the ones that are orange are the ones that are different. So if I can go in and see exactly what this forecast is going to be. So if I click on that, I can see that we've added an extra 2,000 just on this scenario for a new sales hire. Now that is really clear. It's really easy for me to see. If we're doing this in the spreadsheet, it becomes really difficult to track. And that's the case there. But I want to go in and have a look at what we've done to our sales projections here, because obviously I'm hoping that our sales are a bit good. So we've added $3,000 a month in terms of the sales, and actually, we're selling, obviously in this example, we're selling to supermarkets. But let's say I want to change that now because I think we can do a bit better. So new client, it's going to be 5K a month. And let's say it's happening every month on the 31st. So I'll create a budget for that. And then we'll you know, my hope is that that's actually taking us with this business, taking us where we need to get to. So little things like that for a business where, especially if you're not financially minded, just being able to run a few numbers and test a few scenarios, it's actually fantastic to be able to explore just like, where do we need to be aiming for? And immediately now, all of a sudden, this new scenario of taking on another office, putting another member of staff in, but that member of staff is actually helping us to boost our sales. So I can actually see, if I jump along here, just exactly the impact of those two, how those two scenarios are going to play out quite differently over the next, and they're based on, this orange scenario is based on exactly the same figures as the base, with just those sales and salary costs changed, which is absolutely fantastic. So yeah, that's the power of being able to do these multi-scenarios in Flow. So those are budgets. And the great thing about those budgets is I can maybe show you, if I jump back a bit into the current month. I'll go to today. The great thing about these budgets is that actually we can see what we've done in the past. So if I jump into the month of July, I can see that we had predicted 10K of sales. But if I click on that, I can actually go in and see that there were 9 payments, and I can see exactly where that 11K that Float's telling me was paid came from. So I can see we had 2 part paid invoices, and we've also had these payments from these, and I can even click and drill into those and find out what they were right down to the line item in Xero, which is just fantastic. So there's no questions if those figures are correct. If it's in Xero, it's going to be in Float. And we can then adjust our budgets going forward based on whether or not we've been accurately projecting. So I have a look in June. Again, I can see that our budget, we didn't have a budget in June, so we were over, but we did better than we expected. So we brought in 4K, and that it's just that power to be able to know the figures that we're looking at are actually what's happening in our accounting software, and then we can adjust our budgets as we get more confident to be more realistic and more accurate. So that's really the budgets, and that's how the budgets fill up with the actuals. So the classic scenario is you've got a marketing team or a marketing person in your company. They've commissioned a new website, and let's see, they've decided that it's going to be 10K for this new website. When the bill comes in, it's actually 20K, and somewhere down the line that didn't get communicated to the company. Basically means that you're able to as soon as that bill hits the accounting software, that's coming through Receipt Bank and into Xero that way. It gets sent to the Receipt Bank. It gets automatically put into Xero. It's automatically showing up in Float, and you've got that real-time sense of, oh, I can now see that we're 10K over budget already, and Float will use that higher figure because we know that the higher figures are more valuable. The actual figures are more valuable than the budgets. So we'll use those instead. The other things that can affect cash flow, like I was saying, invoices due and bills to pay. So here, I can jump in and see all the invoices that are due, and there's 5 with expected payment dates in the past. So I might know, I can also filter those by client. So if I'm looking at city limousines, for example, I can go and select city limousines and say, right, these guys, they've gone bust. And so now I need to ignore them, exclude them from my cash flow. So I've just taken them out immediately, and now I can see those aren't going to happen. And actually I'll take this one out too. I can click on it individually. I can move it to a specific date, but I'm going to take it out from the cash flow, hit save, and know that no longer am I expecting money that I don't have. If I don't want to see them at all, I can hide them from display excluded invoices here, and I can get into that level of detail. So yeah. Hey, let's have a poll. One question that I think Patrick, you were going to ask was about how people are interacting with their cash flow at the moment.
Yeah, I was just curious as to how people do it. So Rebecca, have you got the poll there? I can bring up on the screen. So yeah, how do you currently track your cash flow? If you just make your choice there, and we'll leave it open for a few seconds. And that'll do it.
Great.
Okay. So not currently tracking is the answer there. Interesting. So curious as to how you're getting on with that.
So we're I think a lot of times when people aren't tracking, it's they're often just using their bank balance, or they're logging into their banking app and seeing what cash is in there. Obviously that's going to show you where you're at right now, but it's not going to show you this figure of, you know, what your invoice is due and your bills to pay. A great thing for us that we find is that when you are in a tight cash position, you might be able to push back the payment of something. So we've got eight bills that are overdue. We can get somebody on the phone and go and say, right, Smart Agency, for example, we're in a tight cash position. We're going to actually ask, they've agreed that we can pay them at a later date. So we're going to pay them at the end of August, or actually into September. They're cool with that because we're always good for it. So we've done that now, and we've set those smart agencies into the 5th of September. So by managing these, some of these bigger payments, we can actually see what we can do and where the capacity is. And that just really helps with understanding, like what have we got? What do we got to play with? And when do we actually really need to go and start seeking other sources of finance? Because ultimately, once you've tried to push back your payables and pull in all your receivables, if there's still a cash gap, like we're seeing here, it might be time to think about overdraft. It might be time to think about some other kind of finance ability. So yeah, that is ultimately Float in a nutshell. We've got scenarios which have shown you, we've got the budgets and how the budgets fill up with the actuals. We've got the invoices due, the bills to pay, which with the expected payment dates. And the final thing that I want to show you here is insights. So this is a new feature that we've been working on in Float. So let's say accounts to watch. So these are categories of spending where you set budgets, and you might find that you're actually not really hitting your targets. So here, we don't have a huge amount of data with this demo company, but I can see that our budget was 2,000 and we paid out 5,000 or 6,000 almost. So that might be something in advertising that the advertising team were spending. We can see once we build up a bit more historical data, we can see that our advertising department might be spending consistently more than we'd agreed, and we might need to have a word with that and understand why that is. So yeah, I'd like to. Patrick's just asked me to show you the daily breakdown, which I'll do in a second. So the other thing we got here, rent. Again, we've seen that we're actually now, because we're over rent, we're budgeting here. We've actually, the paid is black, so we're actually, the rent increased in July, and we didn't notice that in our budget. So we maybe need to go in to August, September, and increase that rent, because it looks like it's already jumped up. So that's, again, another great example where you can be basing your forecast on a budget that's not really accurate anymore. And you can drill down into any of these categories, which is really powerful. So we've also got the budget variance report, which again is a great feature in Float. this shows you based on last 3 months, or I think it goes up to 6 months whenever we've got the data, and we can actually see how we're performing. So here we can see that our sales over the last 3 months, our sales budget was 10K. We've actually brought in 15K. So that's a 5K difference. It's quite significant in terms of percentage. And that might be something, again, we've under predicted our sales, and that we might be being conservative, but actually, if our sales are going to be consistent, then let's go ahead and project that budget. So again, it's picked up advertising, which we've already seen in the other report. It's just a quick way of looking down entertainment significantly more over the last 3 months. Again, just ways that you can get quick insights into what's going on with your cash, we think is really useful. And you can flick that on by scenario as well. So really like that one. And then scenario comparison just gives you a little bit more control over the kind of report you can get. So we can spread that out to 18 months. I'm going to add this scenario that we were looking at, taking on a new sales hire. Let's have a look at that losing a client one as well. Whoa, we don't want to lose that. It must be a big client. So that's a bit scary. But you can start to see the impact of these, just seeing things, how they play out over the long term. And then I can go ahead and export that chart and stick it in a board pack. And it's just, again, really powerful, something you can do really quickly. To run back, there's one other page I haven't shown you, which is a daily breakdown. This gives you quite a lot of tight control over a period. So if you're looking to find out where specifically you are, why your cash is taking a specific dip over a certain period of time, we might want to run that just from the 1st of September to the 11th of September. So if I go in and do that, say, let's start this period on the 1st of September, and let's run it to the 11th of September. Now I can actually drill in and get a list of all my outgoings almost as they happen, basically from float. So we can find everything that's coming out on that very granular level, which is great for when you're trying to dig into where are the big incomes and outcomes happening. So say most of this here, all of this cash is either coming in from a budget or from an invoice and bill in the system. And that allows me to debug quite a lot of times whenever I'm not sure exactly where things are coming from, or just it's a different way of having a look and seeing exactly the kind of net movement and everything that happens in between. So, and that's really that is really an overview of float. We could run some polls, Patrick, or we could. I'm happy to take some questions from anybody on the line. So really happy to pass it back to you. And okay, Patrick's saying let's do a poll. So. Rebecca, I guess one of my questions is how often are you reconciling your accounts in your accounting software? Because one of the things that we found is that prior to using a tool like Float, we found we weren't really motivated to reconcile our zero. We just leave it to the end of the month or even end of the quarter. Whereas now we're using Float much more actively. We want that kind of real-time data to flow through. So we have a bookkeeper come in and do it every like twice a week. And we find that the benefits of that are that it's bringing in, it's keeping our accounts much up to date much faster and much quicker. And it's also less likely to lose stuff and have to spend a lot of time looking for receipts and bills. But it's also giving us that sense of control over the finances and being able to close our financial month end almost days after we do it. So I'm curious to run that poll and just see how often people are reconciling their accounting software.
Yeah, and that's a brilliant point that you made there. And as with anything, you've got to put the data in, and you want to make sure that the data that you put in is obviously accurate, timely. Like you said, if you're behind on your bookkeeping, then the scenarios that you get out the other end are not going to be as valuable to you. So that's why here, like at Farnell Clarke, we try to offer our bookkeeping services to our clients so that we more or less do it live. So we do actually offer daily bookkeeping.
Brilliant.
So yeah, so that's a brilliant question. I'll launch that now.
Yeah, that's how we're able to offer the service that we do, is that the bookkeeping is done daily. It's chipped away at, and we always know it's up to date, so float becomes very relevant.
Yeah, it's huge. I mean, there's a lot of things that are coming in and out, and if they're just sitting in zero unreconciled, there's very little you can do. We only use reconciled data because, for example, if something comes in, it would make it very difficult to know if that's a payment. Is it a payment of an invoice, or is it something that you weren't expecting? So that's why there can be a discrepancy until you reconcile.
Oh, totally. We had a client who, using float or showing them float, actually became the catalyst for changing their entire approach. So that they said, "Oh no, I never look at zero. It's always out of date. So why would float be any good?" So we turned it on its head and said, "Well, actually, no, come on. I mean, if you update stuff, then this will suddenly become relevant." He got interested, and then he saw that now he wants to get zero up to date. So now he's using receipt blank, and it kind of went backwards from float becoming a kind of window to that.
Well, often, certainly as a business owner, I used to have an accountant who would come in and give me P&L balance sheet reports that were, 6 months out of date, and they would literally go into a drawer and stay there until I needed to clear out the drawer. I wasn't really that interested in that. I really wanted to know about where our cash was and what could we afford to spend money on. So yeah, I totally.
It's hard to run a business if you haven't got the data. You mentioned to me earlier, just before the call, Colin, about milestones. Do you want to go into that? It's just, like how when businesses go from you do it all yourself and then
yeah, absolutely. So I think we started off, I was doing all our bookkeeping and accounting, so I would do all the work in zero, and realized that actually the job as you're growing a business is to sort of be able to delegate stuff. And so having an operations manager who would come in and take that on, all the bank reconciliation, all the payment of the invoices and bills, really, helped me to sort of take a step back and then actually understand, have more time to be strategic and think about what are we going to spend our cash on, rather than
getting to that stage brings its own cash flow challenge, does it not?
Absolutely.
The new staff coming in, the premises and all this.
Well, again, it's that thing of going, well, let's look at what we can see our sales projections going up. So do we want to just build cash cushion where I'm pedaling faster and faster and faster and not able to do more, do all the things that I should be doing to grow the business? Or actually, do we want to take on, can we risk now taking on, because it's always a risk taking on another member of staff, and it's a commitment from a payroll point of view. But when you can see that and you can actually go in and model that and say, right, that's going to be another $2,000 to $2,500 a month. So let's put that into float and just see, okay, we've got this. Or actually, if our sales don't increase by X, we're going to know that we're going to struggle with that. So it really helps you see what you need to do to hit those milestones. And for us, we always wanted to grow a successful and a growing team. So it was always about making sure we're growing our top line sales, and then we're actually spending that money rather than trying to sit too comfortably on a big cash cushion, because that's not the kind of business that we want to be. So every time we've got extra capacity, we're generally looking at hiring and how we can use the people to continue the growth. I think so many businesses just get to that point where they're just sticking and they're scared to invest. Which, I get it. It's scary when you're you're the name on the bank liability list. But having that commitment to growth and being able to see the cash going up is a really good opportunity to feel like you've hit the next milestone.
Totally. Well, I'm glad you mentioned investment, because that's what people sometimes don't consider. Investing in some software like this, that's what you're doing, is you're investing. So it's not really, don't think of it as another cost, thinking about your cash flow and managing your cash flow, because it's just like any other asset. You're buying something so that you can have visibility on your cash flow, and it will improve how you can run your business. So it's more of an investment, less of a cost. Okay, so that's great. Thank you very much, Colin.
Great,
that was
thanks, guys.
Fantastic run through,
Yeah.
really, and from the man himself who started the thing. And I think we can all see now how the thing works and how you can get great benefit from it. We use it for our clients at Farnell Clarke, and we, as you can see on the screen there, basically we just want businesses to do well. And having this window into what's really going on with the cash is a fantastic way to start with your forecasting. So we're there to help. As you saw, it's a very simple, easy to use product, very intuitive. So what often happens is the business owner is quite happily using it, and we're in the background to help and enhance the forecasts and to advise. But it can be a sort of co-pilot thing, or people use it on their own.
Yeah, definitely, and thank you both again for joining us. And yeah, I think the message that I've definitely taken away today is that we all need to be proactive. We all need to work together. You know, don't let those scenarios creep up on you, and then you try and forecast or budget for them. I guess it's being brave enough to plan for those events now, and then not, shall I say, wait until the event happens.
Yeah, and communicate within the company if the rent does double, you know.
Yeah.
Tell people.
Totally.
So there's lots of other lessons, and thank you for Colin for the demo there. And yeah, for you, those who are watching us and joining us today, thank you again, and we'll be joining you soon for our next product demonstration.
Sure, and as you can see on the screen, if you want to know more, then get in contact with us there on those email addresses, or call our office from the website. There's a number there.
Yeah.
All right, guys.
Brilliant. Thanks, everyone.
All right, see you then.